Okay, hello everyone. This has been a very eventful weekend. We'll go over the numbers, but this is Miki. I'm here with Rosalie, aka the Crypto Queen. How are you today, Rosalie?
I'm good. I mean, it's a gloomy day here in New York today. The weather is bad. Wall Street feels a little sad. The weekend was definitely very interesting turn of events. Although I did go see Daniel Tosh on Friday, so I had a good comedy show and a good laugh
Was it?
before.
Was it?
It was very funny. It was really good. And then, yeah,
Did he talk
looking
about
at
the crypto market at all, or he's not exposed?
no, he did
Didn't
not.
hold
But
a call spread on ETH.
I hope he did. But I don't think he did.
Very cool. Yeah, I had a cold develop over the past few days, which is market's down, my health is down. We'll survive. But yeah, this is the stop losing, start trading. This is the trading show that we do here at the Panoptic team. We're discussing options, discussing trades. Rosie used to be a meme coin trader. Now she's a options trader. So this is just me going over the concepts of options trading, explaining this to Rosalie, but also the audience. How to trade options, how to position yourself to be successful long term. Nothing we say is financial advice, of course, but this is just for financial entertainment. We discuss trades. The intern decides to listen to us every once in a while. I think, yeah, we can go right into it, but yeah, you may have recommended a bearish trade on ETH. I think last Friday you sensed something was coming, maybe.
I did. Yeah, I remember we were talking about the range and then we looked at historical prices of ETH and we saw that it hadn't gone below 1,600 in a long time. And I was like, I had a feeling it would, but
It
I
did
kind
go
of took it
down,
back. But yeah, it did.
dipped to 1430. This is a very sad, of course, but the price is what it is. It happened also, I think, Friday afternoon ish, which was no Sunday yesterday. Everything went down even further. I think with the Asian markets opening, so it is definitely struggling, and all of crypto is also struggling. But yes, hitting new lows. Again, if a lot of people like maybe in the audience are ETH holders, it might be hard to kind of swallow. But again, there's option trades for this, but it's not the only uh, crypto that's down. Bitcoin as well, hitting new lows. Yes, also hit the lowest 74K. So yeah, I think of course Bitcoin is overperforming. It's not effective as much, but every coin it basically is down 15% over the past week, which is again, of course, reflected by the S&P 500 chart going down and the terrorists. Since we're here, let's talk about volatility a little bit, which is the EVIV index from our friends at Volmex. But this is again, volatility is a different thing than just price action. What we see here is that over the past 2 months, we did hit pretty high numbers, 83 now, but it hit 90 volatility. This is the highest it's been. And if we go back to the lessons, when IV is high, what should we do in the options trading world, Rosalie?
Um, so hi.
Yes, very
Hi.
confident. I like this answer. Yeah, the it's not as if it's an easy trade, but volatility is a measure of market uncertainty. Highly volatile assets do have a lot of price action to them. The implied volatility is what people think is going to happen in the future, and it's a lot more obvious in the options Uniswap trading world. But high volatility is because there's less liquidity in the system. Same trade moves the price more. So as a option seller, as a panoptic kind of LP, if you sell, you are tapping into that high volatility, higher return per unit of liquidity deployed. And the fact that it's higher than what it's been is a very good signal. You have to look at it with respect to itself. Again, a week or week and a half ago, we were at lowest of the lows. Now it's going very high back up. We'll see maybe some examples, but if the volatility is low, maybe you're thinking about buying options because you have kind of an edge. If it's high, you may be thinking about selling options. we'll see that we don't buy that many options on the Panoptic intern account, but maybe I'll try to find someone that did buy options because I do bought puts. They were cheap. They were a good way to kind of capitalize on that low volatility. So
Okay, good. So I was right. High volatility is good for selling. I got a little uncertain there,
yes,
but
and low volatility it's good for buying. If you do it in a traditional options market, buying, selling, it's a bit upfront, so you get the cash right away. Here it's on Panoptic, it's streamed through. It's slightly different calculus, but it's still a good entry point is high volatility. So let's go back to the intern again. The intern is very prolific. They're listening to us. They, we can see their P&L over the past with open position is between $50. We can see here the price for each market that we're in. But everyone we've made money. Again, this is a trade. We'll see that we positioned ourselves well. We were expecting the price to go down for some of the assets, and yeah, this is one of those where it did go down. So, which one do you? Again, there's always a zero when you're doing it. Which one do you want to look first?
yeah, I would like to look at the ETH USDC pool first.
Yes. Um, this one was a newer position. We'll see now. Spread is zero, delta is zero. That means something very specific. But this was a position that was minted to help another position being closed. This was a call spread that was sold. And yeah, what do we see here from that summary page?
Well, yeah, the first thing I see is out of range, right? So, um,
Yeah,
that
both
yeah
options
might
are out
be
of range,
yeah. So not earning any more fees, um,
but
but
it's in a
also
good
not
way. It's in the
paying
flat
for
part.
yeah, yeah.
Which means that we did earn some fees, but we left not too long ago actually. But we left, so we earn not earning any fees. Of course, the Bergen reform was 1750. We went way past this on Sunday, but yeah, I agree with you. Now it would be a good time to close. This liquidity is doing nothing. The problem what we wanted to solve was that the option that was sold was purchased by a few people actually. So if the intern were to close that position, they would not be able to close it because they've sold 0.87 ETH, 0.58, or a lot of folks purchase these calls, and then that means we cannot close them. Instead, we need to force exercise the users. The interface is actually pretty good at it. So if the intern is happy with paying the price, there's a cost to force exercising. They can one, two, three, four, five, six, seven. They can force exercise 7 accounts in one go, close their positions, collect that $15 of profit here. I think the forced exercise fee could be similar than that,
Mm,
or maybe higher. It is what it is, but we'll see what the intern decides.
okay, yeah.
And if we're to now, we've seen the price go down. The end of the world happened. I always have this thing that the end of the world doesn't happen twice, but yeah, if we were to look at the latest few days, what would you be? What's your assumption about the price of ETH if we were to set up a new trade?
I'm still pretty bearish. I feel like right now the market is kind of just headed for new ranges and new prices and to like yeah figure out new strategies there, kind of relocate that liquidity and but not too bearish because like you said the end of the world already happened. Can't happen twice, but
And yeah, exactly. So what we can do is that if we're bearish, there's different trades. I would not buy puts because they benefited quite a bit when there's a huge change. When there's a more gradual one, you end up paying more fees. Short call is one way; it's a bit more risky. And then something that we've done in the ETH BTC was call spreads, which is what you mentioned as well. Relocate some of that liquidity because there is some liquidity still out of range here, and we can imagine buying that liquid that's out of range. Yes, and then relocating it closer to the price. In that case, that would be this called spread. There is a limited if the price were to revert. We don't want that necessarily. This is really bearish, but that type of trade where we remove some liquidity from that strike, or it could be even higher. But the further away you are, the more you can lose. But yeah, I would also advocate for some of this. Take advantage of those that haven't managed their position yet. Buy some liquidity, move it in range. That position would earn, and it depends on the size, I guess. But uh,
Yeah, I was just gonna say, always look at the little V that we have there. Well,
yes. So this is one. This one, a lot of options have been sold. So 12 ETH worth of calls have been sold. Someone is bearish, definitely selling naked calls. There's a limit of buying, but then we could tap into that extra return. But yeah, that would be also what I would do. Something like relocating liquidity, doing it at a relatively high capital efficiency, and also moving it to being in range. Depending on how bullish or bearish we are, we can play with this. And then maybe in terms of price, you say in the new range, what would be a acceptable, or what's your predicted price range for ETH? Because now
um,
it's 1,200 to 2,000, which is pretty wide. But yeah, we've seen these numbers very recently.
yeah, I think we'll see some more lows, and it probably won't go back up above 2000, like 200 for a while. I think this looks like an okay range for the month. I would expect a more positive shift, maybe
Oh my
May.
God, you're very bearish. Who
Yeah,
knows? Maybe the Trump tariffs are what's kind of the tail wagging the dog now. But yeah, who knows? Crypto used to be, I don't know if it's safety of asset, but yeah, it used to be a bit more decoupled. But what we saw for the past few days,
I think
definitely, yes.
yeah. I know a lot of active traders, and it looks like people are kind of getting a little bit scared and maybe buying less right now and just trying to cover their
Being
losses. And so I don't really expect, although it's also a great time to buy, right, when the price is low. So
yeah, so that's the thing is be greedy when others are fearful. So these traders and maybe again, so we've seen a lot of price downward action. This certainly for the since January 1st, which the price was 3,300, less than 50% then, and then even the launch of Panoptic was mid-December, so it is definitely on the downside. We've seen these huge jumps and the price stays stable, huge jumps stable. I would also maybe think it's going to be stable for a while. Who knows? But yes, I'd say that. I mean, and then we haven't done this, but yeah, I'll paste that link to the chat. Those listening here can try to also create the same option if they want to, but this one is also for posterity. We can refer to it. But yes, app.panoptic. So this is the trade. Try it out if you want.
yeah, hopefully in
Don't
turn,
in turn. You've seen
we'll
it. Now it's not.
maybe listen.
All right. So let's go over one other position because I think a lot of the other ones that we've seen were pretty. Oh, intern here. Pretty okay. Um, Ticker Bitcoin is making money. Same thing with the Eigenlayer coin. Uh, I would say that there's nothing to worry about now because they have been moving quite a bit, but we're still earning fees. The ETH BTC is another one that I want to look at. So if you don't mind, we'll have to look at this one.
Yeah.
There we go.
Hmm.
This is pretty neat. So yeah, we're earning 3% in total. It's in Bitcoin because people have the ratio in mind, but we're earning some fees. We're earning pretty much all of our profit is from fees, a little bit of direction. Um, yeah. Would you manage this? Yeah. What's your take seeing that the P&L chart?
Yeah, I mean, I see it's moved quite a lot, the range, and we were kind of at that flat slope, and now we're, hitting a more um, negative slope.
Yeah. Oh,
So
positive
maybe
delta here. Yeah. So
positive
we're
delta, yeah. So something to look out for, but we do have a wide range, 18 days. We will be earning fees on the way down still, right? So,
yes, yes, and it might be one of those where, as you say, it's hard to know. We're still in range. We're still earning fees, but the way this was set up, so we started here, and max profit was lower. And as you say, we are past that point. So here it might be one of those where it's about halfway in terms of time. This is a 30-day or monthly option, and it's worked quite well. And it might be one of those where we can take these profits if it's a. Do we have other people selling? Yeah. Oh, this one is earning it a little bit less, but yeah, I would a little bit more. So I would say I would personally maybe take the profits and redeploy, maybe scale a little bit, increase the size, decrease the size, move a little bit. But this wouldn't work in a sense. We had a bearish assumption, it moved down. Now it may be moving too much where it starts being dangerous, and we've earned quite a bit of fees. So I'd say this is one candidate for management because it worked for us. The next step is that it's either stops working and we lose, or it continues to work. But at least I'd rather take my chances and kind of realize that profit.
Yeah, okay. Yeah, I think it's very safe. And I think options, sometimes I forget that, yeah, it's just about small wins along the way and making sure that when big losses happen, it's not as detrimental. So take the win probably, and I'm not want more.
Yeah, and then I don't know if you saw, but I tweeted about this. But this is the profit, the fees earned over time, and maybe we can make it bigger. But this is actually pretty interesting, right? Um, the slope was very, very shallow, meaning that we earn a little bit of fees every day. And we can look at the slope, and over the past day or day and a half, it pretty much exploded. A lot of fees, more than 50% of the fees have been earned over the past 24 hours.
Well,
And
yeah.
while it's only 1 day out of 15. So it's also where selling options is where you get paid for the risk you take. This one was working for us where we were not quite wrong. We were right in terms of action, but also in fees where we're kind of there to be compensated. And unless there's a reversal, or I don't know if again the world will end again, but this is also another way where we've earned so much, 50% maybe of our returns in 1 day. Will we earn the same in the next 10 days? Who knows? So it might be worth to redeploy, set a new trade.
Yeah, okay. That makes a lot of sense. Yeah, it's not good to be greedy.
And
And 50% is a lot for one day. So,
and a lot of what I yeah, exactly. And sorry. If you start and you ask yourself a question and it's not obviously no in terms of no, it's too early, no, it hasn't worked for us, or no, I don't think it's a good way. If you're on the fence, you might as well yes, say it. It's fine. Let's manage. If you're on the fence or positive, you'll earn the fees. Your gut knows, because it's on the fence, meaning could be better or not, but you might as well cut your losses. So this is interesting. Again, this is a position that is earning fees, selling options. We've earned a lot. Price move, but then not too much. So that's a very, very good trade. I think I'll go back to that preview. We'll push this probably for this week's, but now we have this risk tab that will allow us to see, are we close to being liquidated, or what's the risk associated with holding that position, because this is the payoff chart of that position. Again, we're earning some fees, this is fine. There's a new risk analysis tab here that will be shown, and if we do this now, we can see, yeah, so we're going to do, but you can see the required collateral in red and the collateral balance in green. And the way that Panoptic works is you're required to be below your balance, because if there's a crossing point and your required is more than your balance, then you get liquidated. And we try to show this visually where we have a liquidation price on the downward move and also liquidation price on the upward move. And that means that your balance changes with price, like we do cross margining, but also your collateral requirements. So if we were to go way, way back up, and then the prices here are like min tick, but you are liquidated, so it never crosses again. So that's kind of a visual way to see exactly when you get liquidated, and that's another way to have your kind of risk bearings in mind. And the current price or the current ratio is 0.02, about 50 ETH per Bitcoin. That's the current price. Uh, if you get liquidated on the way down, it's 0.0025. So 400 ETH per Bitcoin.
Wow.
So it's still far off. So I
Yeah.
put it on the log scale because it has to show. But if the price were to go another factor of 10, then we get liquidated. That means we're managing this well. We have like 10-15% of the buying power. Factor of 10 is somewhat in the realm of possibilities for some assets. But if it goes down by a factor of 10, we get liquidated. Same thing on the way up. If it's about 0.25, another factor of 10 on the way up. If it's now 4 ETH per Bitcoin, so ETH goes to 25,000, you get liquidated, and Bitcoin stays the same. So this is something that we'll probably have to see, and it's part of the management that we need to kind of anyone options trader has to kind of know about. But this one shows you that yes, it's risky. Yes, you can get liquidated. This is under collateralized lending, but by sizing it well, you're covered between the price of ETH between 25,000 or $250 type of thing. So it's still good. But yeah, I would say this one position, take the profits, redeploy, and we can talk about this on Wednesday if that makes sense.
Yeah. So that sounds good. I like the risk analysis chart. It looks very good.
Yeah, and then the this is the goal of an option seller for sure. Not necessarily buyer, but seller is to survive. Be sure that you can sustain these large drops. We've seen 50-60% drops since the beginning. We haven't seen that many liquidations. And again, personally, I haven't been liquidated because you have to size properly. It's bad to lose 50%, but if you manage right, it's fine. And then I'm gonna go to another. So that's one way to kind of gauge the risks. Let's go to one other trade. I've looked around and see who was making the best trades over the past day. So last night I looked at all the trades. Don't want to put anyone on the top spot, but this one account actually is doing pretty well. They earned open P&L $600, and yeah, what did you yeah what's that trade? If you look at the chart, what do you think they're trading there?
Yeah, I mean they're definitely very bearish. And so bearish trades, they seem to perhaps be at different strike prices or different deltas since there's five of them or four, but
Yeah, but they are selling call options, which is negative delta. It's more risky than the call spreads, but this account sold calls, it seems, repeatedly. This one is not a day ago. They've already made almost 8% on that, more than 8%. So if you
wow.
position well and the price has stabilized a little bit, but this account did create a lot of good trades. They size appropriately. They may be on the higher side, but it's only if they get liquidated if the price goes up. I want to bring this to show also their risk profile. This is ETH with EC. Let's see maybe the positions, but they've been printing. I'm a bit jealous, but this one again, 7 days, a 7 hour trade making $1,000, 500%. So this is a good trader. If they're listening here, we want to see and meet them. Okay, yeah. So let me get to that risk analysis tab and see again how much they are exposed. Maybe given that they've traded successfully, their collateral balance has gone up over the past day or day and a half because they were kind of maybe awake and able to trade. This is their portfolio P&L chart. What their risk analysis tells us is that this is again on the way down. Red and green never cross. So if the price keeps going down, they won't get liquidated. They're selling calls will get out of them, and that's fine. If the price goes up, on the other hand, then you have this crossing point. Seems to be close-ish to the current price. But here, if the price were to bounce back very, very quickly to 22 or 2300, then they would get liquidated on their naked calls. This is still kind of maybe $600 worth of upside in a very short amount of time. So I wouldn't be worried over them. But this is kind of another way to see, yes, you're short the market. You could get liquidated on the way up. You've made maybe $1,000, $2,000, which is great. But if the price was to go the other way, you would get liquidated. In that case, I'm also not worried in terms of risk. If it goes to 2,300 overnight and beyond, um, yes, I'd be surprised, but maybe they have some mitigation in place. So that's another account where they've made, again, 25% in profits on their ETH deposits. And this is actually pretty good. They are kind of making money, but then they have some risk, but it's still manageable in my sense. So
Nice, very impressive. Yeah, seems to be a good trader.
yeah, I did. I think I hopped on it. I sold a couple of calls too, and it was also kind of working for me. But yeah, this is kind of the P&L chart. Let's see if anyone's been buying options, if they're making money. But no, that's fine. Anyway, so this is kind of the another way to see how well can people trade, how well can they respond to the market. There are ways to make money if the price goes up. There are ways to make money if the price goes down. Case I'm showing just another one that fish, but someone that has been buying put options. Price was 1900. Now it's 1500. Directionally, they were right. They are paying not much fees in terms of profit, but most of it also pass over the past 24 hours. But that's another way to profit: buying puts, selling calls when the price goes down. So
When you were just at the strike price where we were looking at the liquidity bars, I saw a really interesting trade there.
oh,
To
back to this one.
Yeah. Oh no, not this one. The other one.
Maybe this one.
Yeah, the second one on the left. That looks like a
Oh,
very funky trade. What's happening there?
oh, let's see. It's oh my god, we do some strategy preloading. Oh my god, what is this? This account is barely paying anything, meaning that they are controlling not much, but then the spread is pretty much zero because they are selling one call and buying a bunch of puts and calls in a way that I don't quite understand. Seems like they're doing a straddle and a synthetic short at the same time. I don't know. It's maybe even from the payoff. We see that what the payoff looks like. It's fairly straightforward to understand what the P&L chart looking like, and if the price were to go to 600, they make money. If it goes to 5K, they make money. Somewhere weird is happening in the middle here.
Yeah, I wonder about that. I mean, a strangle would have worked here as well. Is there any upside, potential upside from that extra put
No, yeah.
or
So
call
they're
in the
they're
yeah.
buying a call. They're buying a put, and it's that two strikes which are kind of wide. So this is one trade here, and at the same time they're also buying a bunch of calls. Oh, and selling a bunch of calls. So yeah, I have no idea. They're creating a tiny call spread and a straddle. I think they may be wanting to dip into some of that high Vigoid. Normally when you sell, you want to be in a place where there's a lot of buying, but maybe people close their options. I don't know. Does look funky.
That chart looks very funky, but doesn't seem to be hurting them too much.
Not sure
So
if that's their
that
own
they're
position.
having fun.
Yeah, okay, that's funny. All right, someone is having fun. Careful here. They're very high in terms of buying margin utilization, and they are paying fees net. So that will be somewhere to notice because even though they have some collateral left, they will be paying over time, and they may be kind of liquidated because they have a debt to pay. So, anyways, lots of trades. Maybe this is another person that we should get on board and say what the hell was going on when you set up that trade. But yeah, this is fun. Again, the fact that you can be so versatile, you can do a lot with options. That might be a new trade we name after that users. But yeah, this is another one of those interesting trade where you don't know what's going on until you get the chart, and now it makes sense. It's a long straddle with some noise in the middle, but it's very much like a long straddle.
Yeah, it's great that you can have so much yeah, different varieties of flags and strategies, and even create your own new strategies on the
Yeah, options are for everyone. You want to make money on the way up or down. Again, if you're right, this is the easy part, being right. But once you're right, you can make money. All right, this is it. So we'll have maybe the intern create that call spread on ETH, and also this is it here. Have the intern maybe close their Bitcoin position, which worked for them very well, and then we'll go from there. What happens on Wednesday? But yeah, this is it.
Awesome. Thank you.
Yeah, thanks very much, everyone. We're a bit about 30 minutes, but this is great. Thanks for joining, and we'll see you on Wednesday.